Since launching in May of 2021, SVOL has been quietly kicking ass. It's been outperforming the S&P 500 for total returns, and it distributes a consistent monthly income that's currently yielding over 16%. I've owned it since April of 2023, and so far, so good. I've been very happy with it. But recently I've noticed some misinformation that's been circulating, and today I want to address that. So I've invited Larry Kim from Simplify to join us. Welcome, Larry.
It's great to be here. Thank you.
So as I mentioned, two things I want to address. The first one is return of capital, and you began distributing return of capital in 2023. Were you returning the investor funds back to the investors, or was it actually a tax treatment?
Most of the return of capital that we saw was due to the accounting treatment involved with VIX futures. Some of the distributions would have been classified as return of capital regardless of how much the fund actually earned.
Return of capital is a fairly confusing term. It can be destructive to NAV or not. But I should point out that Simplify is not the only fund that distributes return of capital with that tax treatment. There's NEOS, there's Global X, Eaton Vance. It's not a new thing. But you mentioned that the majority is tax treatment, and then some of it would be a shortfall for a given month, because I've noticed that the distributions look almost exactly the same every month. I take it that's not a coincidence.
SVOL's distributions are managed. So we set the distribution amount equal to the fund's expected long-term carry, which is the income from the fixed income portion of the portfolio, plus the income earned from the core VIX future strategy. We keep the distributions relatively stable and don't make big changes from month to month to make it simpler for investors to plan their cash flow and, frankly, to make it easier for them to understand the product. So in some months, the fund will pay out more than it actually earned, but in other months, it will pay out less than it actually earned. Over time, the goal is for the distributions to closely match the actual carry.
The amount of return of capital for this fund, SVOL, is fairly high. So when you have those months where it's a little bit short, you could actually do the return of investor funds, as many funds do. But if we look back on 2023, would it be fair to say that the vast majority of the distributions that were classified as return of capital were actually the tax treatment?
Yes, that's correct. Most of it was due to the tax treatment.
Okay. But you can't classify 100% as return of capital. And that's because of what? Are there different portions of the fund that get treated differently?
Well, the first thing is it's important to understand that Simplify is not attempting to generate return of capital or manage taxes in any way. The classification of distributions is just a byproduct of the required operational and accounting rules. But in general, the return of capital that you've seen usually is a result of the VIX futures part of the portfolio.
Right. And the fixed income portion, that also generates some income, but that income would be treated as ordinary income.
That's correct.
And I've seen people react to different return of capital numbers that you post on your website. Are those numbers that appear month to month estimates or the actual final accurate number?
Investors should always use the tax forms they get from their broker-dealer. And to be honest, some broker-dealers interpret the financials differently from others. The numbers that we report on the website are estimates mainly used for planning purposes.
So if on the first of the month, or whatever day of the month, you see zero return of capital, for example, that doesn't mean anything necessarily. It could change a couple of weeks later.
It could.
And when you launched the fund, originally there was no return of capital. So what changed during the life of the fund?
Right. Well, SVOL really is the first of its kind, a fund trading in VIX futures that's classified here in the U.S. as a 1940 Act investment company. Prior to SVOL, other products of its type were either exchange-traded notes, which are essentially bank obligations, or they were some type of traded partnership. We felt it best to come out of the gate with the most conservative interpretation, which is to classify everything as income. Over time, our accountants became more comfortable with declaring a portion of the distributions as return of capital. But please remember that return of capital is not an objective of the fund. Investors shouldn't plan on it, but just should consider it a happy bonus if it happens.
I see. And that's why you don't promote it in your marketing materials. It's an outcome, not an objective.
That's correct.
Hypothetically, if an ETF was distributing a lot of investor funds back to the investors over a long period of time, what would be an obvious indicator of that?
The most important indicator for SVOL, or for any fund for that matter, will always be total return. Total return is the truth serum of the investment world. It reveals all. I mean, suppose a fund has a 12% yield, which sounds great, but a 10-year average annual return of 1%. Total return, reveals the truth, right? So if a fund does not have an attractive total return over time, then all the distributions in the world and how they're classified simply don't matter.
I see. Well, the current yield is a bit over 16% as we record this, and that's been somewhat typical for the fund. I ran the total return for the year 2023, and it was just under 20%. So that would mean, because the total return was higher than the yield, that the net asset value actually increased, and you obviously weren't, at least for the majority of situations, returning investors' funds back to them.
Yes, that's correct. Just keep an eye on total return over time. And by that, I mean years, not months. SVOL, like any equity-based fund, will have down years as well as up years. But just keep an eye on the return.
That's simple. And actually, looking back at the complete price history for the fund, I noticed it went up initially in 2021. What were the factors behind that?
The primary reason, well, first remember that SVOL shorts the VIX, and the VIX typically moves inversely with stock prices. So in 2021, as stocks were ripping higher, the VIX, the volatility index, was declining. And since SVOL shorts the VIX, that was a tailwind to returns.
Okay, that makes sense. I also noticed in 2021 that the distributions didn't start immediately when the fund was launched. So did that affect the price of SVOL?
Yes, that was another contributing factor. While we were just getting started, we didn't initially pay out the distributions. And so all the earnings from the strategy just increased the NAV of the fund. So yes, that was another factor.
Okay. And the reason I'm asking these questions is when I was looking at the price history, I saw that it was high going back to the beginning, and now it's lower. So I'm wondering, is it going to bounce back? Is this a trend? But it's a little bit of an anomaly that at the beginning, first of all, it was a good year. The timing was good when you launched. But second of all, holding back some of those distributions also affected the price, made it go up.
Right.
Go on.
Yes. I would say that SVOL, you would not expect over long periods of time to see the NAV go up and up and up. And that's because, we're distributing the profits.
Right. Look to the distributions for your returns for the most part, right?
Look at the total return for your returns.
Right. That's a theme. Look at the total returns. Okay.
Right.
So 2022, there was a price decline. So I guess the reverse happened then with the VIX.
Yes, in 2022, which everyone knows was a bad year for the stock market because of rising interest rates, the VIX went up 24%. So that was a headwind for SVOL. So SVOL had a total return of about minus 4% because of that. Still, that was considerably better than the S&P 500, which was down 18% in 2022.
Right. Okay. Well, I think that explains some of the risk for SVOL, which is important to understand because the returns are really high, but not without risk. And some years there's going to be good returns. Some years, like 2022, good example of not so good, but on a relative basis, actually not that bad.
Yes. Short VIX is positively correlated with stocks. In years that are very difficult for the stock market, you would expect that also to affect SVOL.
Right. And we're not going to get into the nitty-gritty of how SVOL generates income, but I've made a few videos and I'll post the two key ones into the description if anyone wants to learn the basics of SVOL. The other misconception, that first one was return of capital. The other one is fees. And if you look at the website, the fee or the expense shows a management fee of 0.5%. That's been the same since the fund began, I believe. And it's an actively managed fund, so that's no surprise. In 2023, another line item was added, and it's referred to as other expenses. What's that one about?
That was, 0.66%. On occasion, one of our broker-dealers may ask for a higher amount of collateral. And the simplest way to handle this is by accessing a repo or repurchase agreement facility. When we do so, the income from the cash we receive offsets completely the interest that we pay on the repo. So in reality, there is no added cost. However, the accounting rules dictate that the interest cost must be added to the expense ratio, but the interest earned may not be used to offset it. So the increased amount of the expenses is an accounting artifact, not an economic one.
And that fee was not, sorry, the expense, it's not a fee, right? It's an expense?
Right.
Right. That expense wasn't there at the beginning. Is that because the broker-dealers were not asking for that level of margin at the beginning?
Right. We had no reason to use it, to use the repurchase facility earlier.
Right. And the repurchase facility is a form of short-term lending, right?
Correct.
Okay. And as impressive as the returns have been so far for SVOL, Simplify actually has another fund that has even higher returns, and that one is based on Bitcoin. And I don't normally cover funds that are related to Bitcoin, but this particular one, Maxi, M-A-X-I, does distribute monthly income. So therefore, it's relevant, and we're going to cover it in an upcoming episode. So I'll see you in that one. Larry, thanks for your time today.
Thanks very much. My pleasure.
Terrific. More Armchair Income coming soon.